Hey, good evening. Dan Fitzpatrick here, stockmarketmentor.com. And I want to look at RingCentral today. Here's why. The company reported earnings after the bell. And you'll see what the stock did. It really gyrated all around. Now, we had a trade going here since, I think, this 222, it was, we certainly could have got it earlier, but we didn't. So we picked it up a few weeks ago at 222, and my idea was that the stock would break out. We're looking for it to break out. I think back here was the day. Actually, we took it on the 14th. Yeah, sorry, my bad. My green arrow. We bought it right here on the 14th, and the reason was because it just looked to me like the stock was firming up. Close to breaking this trend line, which I pointed to here, and then boom, the next day it did. And I'm thinking, okay, great. Hopefully then this will run up through 250 and keep going and really give us a quick payoff. Well, it didn't really do that. Instead, it did for a cup of coffee, and then it fell back down. Almost stopped us out. Like by less than $1, but kept the stop intact. And then the stock was up here yesterday, and then today they report earnings after the bell, right? So if you look at the way it traded pre-close, this is what it looked like. So the stock traded up into the close before earnings, and then once earnings were released, this is what happened. The stock gyrated around wildly. So we sold half of the position before earnings, and that was the right thing to do. The idea being that you're locking in a profit. So if the stock tanks and say you have to sell your remaining half at whatever you bought them for, well, you still have a profit on the entire position. But right now, the reason I'm pointing it out to you is we're kind of back where we started from, where I am looking for this stock to break through 250. And I have a partial position in the stock, and I'm not gonna buy more until this stock breaks through this trend line, which is why I'm setting an alert. If the stock breaks through this trend line, then I'll add to that position. But until it does, I'm just going to stick with what I have, and my stop will be, right down there. So this is at least how I trade around earnings. I learned a lot of this from Mark Minervini, and just losing and winning a whole bunch throughout the years, and kind of gradually figuring out how it is that I can hold a stock for longer than a quarter while still maintaining some kind of risk management. So you sell half, let the other half work, add to that position again at a later time after the stock tells you that it's going higher again. So anyway, enough about that. Members, I'm reviewing our growth stock list and also showing you some of the things that I do to track my own performance. So I think you'll get a lot out of it.